Hello, this is Mike Wade, and welcome to the weekly video featuring Tom's Tools and yours truly. Disclaimers: stock and options trading has large potential rewards, but also large potential risks, and you must be aware of these risks and be willing to accept them in order to invest in the stock and options market. Don't trade money you can't afford to lose. Also remember, I am not an investment advisor. I'm a trader just like you, and please don't construe anything I'm about to share with you as advice. All prices are in US dollars unless noted otherwise, and please read the balance of the disclaimer by pausing the recording. All right, so this week I want to share with you what I call the KISS system. Keep it simple, silly. And you know, sometimes simple works great, and this is a system that I really like, and it's very simple to find. And the way to think of it is let's find a system where the stocks tell us in a single day with a big thunderclap that they're ready to move big. They're ready to make a bullish move or a bearish move. That's the system. You'll be able to do it at the end of this recording. It's that simple, and it works. So to do that, I'm going to highlight Tom's Trading Tools, the close percent change ranker. It's one of the stock rankers. And in this video, I'm going to show you how to trade this simple KISS system. I'm going to show you how to scan for the biggest percent movers using this particular ranker. And I'm going to give you a couple of ideas for confirming these potential stocks with technical analysis, some very basic and simple technical analysis for that matter. All right, I'm going to start with an example. This is Tiffany back on October the 10th, 2018. And on October the 10th, this is what happened. This was the chart. You can see that Tiffany dropped 10.22%. Big drop for a stock, or an index, it'd be a huge drop, but for a stock, that's a big drop. And in doing so, it closed well beneath its 200-day moving average. That in and of itself is enough of a reason to trade a stock. Stocks that close below the 200-day moving average generally continue their move down. It's a sign that institutions are dumping the stock. They keep it above the 200 if it's in favor. So the other thing that's really good about this is that we had a lot of volume on that day. So volume to me equals institutionally convicted stocks. That's probably not the best way to say it, but institutional conviction, where institutions are dumping stock. You can see basically their conviction level by the amount of volume. And you can see there we had a big volume spike. We also broke through several support levels, one at 120. I don't have it drawn, but you can see the line there. We broke below 120, previously support. We broke below 115. We're settled at 110 at the moment, but we broke through some support levels as well. So basic technical analysis. And how did I find it? Well, I ran a scan that I'll show you in a minute. Now, it doesn't end there. In terms of the confirmations, the market itself, this is the S&P 500. It's actually the SPYs, which is the ETF that tracks the S&P 500. And you can see here that the S&P 500 had a 3% drop and closed well beneath its 50-day moving average. It closed well below support at 285. I'm just drawing a line looking at those highs and lows there, and then here. So we had a support break, and we had high volume, a big volume spike on that day as well. And so what does that mean? It means the market is also moving in the same direction as Tiffany is, and therefore a confirming indicator. Now, how did this stock do? Well, it dropped 23% in a handful of months, and a 25% drop. Had you bought some puts on this stock on October the 10th, 2018, I bet you would have been pretty happy. All right, so that's the system, and that's it. Now, how do you find them? That's the next question, of course. Well, it's really easy. First off, let me note for you that I'm on October the 10th, 2018, and this is Tom's backtesting capabilities. It is, I would say, the most important feature of Tom's Tools, and that's the ability to go back and test. So consider it your trading simulator. You can actually go back and test as though you were actually trading Tiffany on 10/10/2018. You can either fill in the dates there, or you can use the calendar button there and just select the date that you want, and you're off to the races. Notice here it says backtest date updated to 2018, 10/10, October the 10th. All right, let's go straight to the scanner. I'm going to go to stocks, stock rankers, and then close percent change. All right, so again, we're on October the 10th. Very, very simple ranker. It does four things. It looks for the biggest bullish breaks, biggest bullish percent moves, the biggest bearish percent moves, bullish and bearish, and you can even scan for the biggest volume spikes. There's a whole system wrapped around that I'll share with you at another time. But for this one, because we found Tiffany using a bearish scan on a day when the markets themselves were bearish, I'm going to select bearish, and then I'm going to select the S&P 500 optionable. That's got the most liquid options, as well as institutionally sponsored stocks, and the slippages are generally much narrower than other indices. If you want help, of course, click the help button, and then last thing to do is click search. So all I did is I click bearish, S&P 500, I click search, and lo and behold, the biggest thunderclap on the list is Tiffany. There's the stock name, the symbol. You can go to the chart. You can pull up a quick picture of the chart by clicking pick. You can go to the news, the chart if you wish. And why would you go to the chart? Well, there's a lot more things you can do on the chart page with other indicators, etc. But you can see that's the chart I showed you before. And let's take a look at some of the other ones. All of these are pretty good. There's an 8% drop on Ralph Lauren, Tapestry. These are big. Some of these are big stocks. Netflix, of course, dropped 8% on that day. So all of these would be really good candidates. But the loudest thunderclaps, the biggest percent changes, are sorted to the top of the list. That is it. Let's wrap it up with a summary slide. This is the KISS closed percent change ranker system. And again, what you want to do is come into the ranker, the closed percent change ranker, select S&P 500 optionable, or pick your own market index, whatever you like. I selected bearish in this particular video, so I'm going to select bearish. But if you're looking for bullish percent closes, then do that. Or you can look for both, and you can also do volume spikes. And then lastly, you click search, and you get your list in a matter of seconds. And then to really run the system, here's some ideas that I just shared with you in this video. And really consider confirming direction with the market. So if the market has made a sudden bullish or bearish move, or is in a bullish or bearish posture, it doesn't have to be a one-day break, then align your wizard selections with the market directions. For example, if I thought the market was bullish, then I would select bullish up here under wizard rankers. All right, look for support and resistance breaks. Look for big volume on the day of the move. Usually there will be. And then also consider using the 50 and 200-day moving averages as well, which we did in this video. All right, everybody, that's it. I hope you found the KISS system useful and the closed percent ranker useful. I hope you enjoyed it, and I'll see you next week.